Now, some bad news this afternoon for the local economy. South Africa's GDP, gross domestic product, falling by 2.2% in the first quarter of 2018. Mining and manufacturing are the largest contributors to the negative turn. The manufacturing sector seeing a decrease of 6.4%. Agriculture contracting by over 20%. That is attributed to a drop in production of field crops as well as horticultural products. I think we can take you live from Sandton now to our Hyde Park studio, where our business reporter Devin Murrigan is standing by. And Devin, whichever way you look at it, this is of great concern, particularly in three sectors: agriculture, mining and manufacturing.
Indeed, it all spells bad news for jobs, Jeremy. I mean, we need this economy to grow, to make a dent in our unemployment rate, currently sitting at 27%. If the economy doesn't grow, it spells bad news for jobs. All right, so let's get into some analysis now. Maarten Ackerman is the Citadel chief economist. Maarten, thanks very much indeed for talking to us. I was chatting to you earlier. This shock, 2.2% decline, we haven't seen this decline since 2009. It's a bit of a surprise.
Yeah, we did expect a negative number, but definitely not as deep as minus 2.2. So that is a shock. And also on the back of, some other developments taking place in the economy. So this is not a good start to the year. It puts a lot of pressure on the growth targets that the government set in the February budget, and also obviously on your fiscal targets. So, if we don't get some better numbers in the second and the third quarter, come October, growth is crucial, not only for jobs, but also to avoid a further downgrade. Yeah. So if we can't get the economy going to actually address things like unemployment, but also getting the fiscal targets right, we still face a major risk for a further downgrade.
To the layperson out there, you look at the first 3 months of the year after December it turned, and we had this elective conference by the ANC putting up Cyril Ramaphosa as the leader and eventually president. We had this term Ramaphoria banding about, and we saw business confidence rise. Consumers were upbeat. One would say, well, why then couldn't we have seen better numbers in the first quarter?
Yeah, I think it's rather soon. So you're right that Ramaphoria definitely supported confidence, the good feel factor. Yeah. So we've seen a massive rebound in consumer and business confidence. That's normally a leading indicator. We need to do that first before the rest can follow. But the structural issues in our economy needs policy to adjust, and that's basically what they've been busy with year to date. But the results of that will only be seen in months, if not years. So we're dealing with a lot of structural issues, and I think this print of the GDP numbers just showing that again, that we've got a very unbalanced growth structure, and that the real creators of jobs is not supporting to the economy. Mining, manufacturing and the likes.
And let's talk about that. We see on the screen there mining down 9.9%, manufacturing shrinking 6.4%. And of course, we'll come to the agriculture in a moment. But these are job-absorbing sectors, and they are affected by sentiment, by what policy is unfolding. Can we see a change being inspired in the months ahead on those two very job-absorbing sectors there?
Well, definitely so. I think we must also keep in mind that the first quarter globally has been a bit of a soft patch. Yep. We're a global economy. We trade with the rest of the world. We've seen a massive decline on the export side as well, which to an extent comes down to the strength in the currency, which was a positive on Cyril Ramaphosa coming in. So I do think some of those numbers can reverse. It seems like the global economy is finding its feet, and that we're not yet to the end of the cycle. So those kind of tailwind should come into play going forward. Mining, it's about business confidence, consumer confidence. It is about confidence in the mining sector, the mining charter. So there's still a lot of policy outstanding that we need to put in place. And you can add to that, the whole thing about land redistribution, which basically will be tabled in August. Now, until we get to those kind of points, that's why I'm saying that the right policy is being put in place, but they need to see more stability and those kind of deadlines that we need to meet before I think global investors would be recommitting to actually foreign direct investment in South Africa. And that's what we need to actually kickstart those sectors that you refer to.
Do we still look at 1.7 to 2% growth for 2018? What's your take?
Yeah, I think we will still get a high one. I don't think, touch wood that we'll see another negative quarter and as a result go into a technical recession. I think this is coming off a very high base in the fourth quarter last year where we had growth of 3.1%, and then a couple of headwinds from the global side. So we will definitely get a high 1+ for this year, which is important for government in terms of what they've budgeted for the budget, and to try and keep that, avoiding the downgrade that we did achieve after Cyril came into power. But, 1.5% is still less than what the population is growing at. So we're not moving forward as a nation. So to really address the issues like job creation, we need to get growth to 2.5%+. And my concern is that the global tailwind that we've seen for the past 5 years is slowly starting to change. You can just think about the trade wars and softer data in Europe and what's happening in Argentina and Turkey. So we need to get our act together quite quickly to actually to actually benefit from the global environment.
This was one piece of bad news on the day. In a few hours, you would likely see cars line up at petrol pumps all over because of the staggering petrol price increase. Does that play a role in limiting growth, you think?
I think one good number from the GDP report was that consumer expenditure was up 1.5.
Yeah.
So that shows that in a very difficult environment, the consumer remained resilient. So that is positive. We're a consumer-based economy, so we need to see that keeping up. But this is going to be a tough year for the consumer because we're seeing quite a big increase in petrol price. There's more likely to follow because the oil prices keep on going. The rand is slipping for more global reasons and local reasons, although today the GDP number didn't help the rand whatsoever. So I think it's going to be a very tough year for consumers. And yes, obviously, higher petrol, higher oil, that's not only for South Africa, but for the rest of the world. It is a consumer tax, if you like. It takes money out of your pocket and it puts pressure on consumer spending and consumer demand.
Okay, so not as easy as we want it to be. Maarten Ackerman, Citadel Chief Economist, thanks very much indeed for talking to us.
Thank you very much.
All right, that's where we leave the economy for now. Jeremy, it's back to you.